Hello traders, Jason here with swinghigh.com. It is Thursday, December 3rd, 2009. It's about 12:10, so this is your halftime report. So far today, we pretty much have a repeat of yesterday. It's looking a lot like deja vu, if you ask me. We gapped up, although yesterday we didn't gap up, but today we gapped up, set new highs for 2009, and pulled back, just like yesterday. Yesterday, if you recall, we made this little triangle and then broke down and struggled to rise back towards the apex of that triangle for the rest of the day. And what do we have today other than a bigger triangle? Let's draw that differently. I mean, there's a couple ways you can draw this triangle here, but basically we do have a bigger triangle for today. And after a pullback, that triangle could break down to the downside. If it does, expect support at 111 on SPY again. But if it breaks out to the upside, I would expect some resistance at the 111.70 mark, but not nearly as much because that's been pretty much tested away, as you can see. Instead, I would expect more resistance at the 112 area for sure, and then at the highs of the year, 112.18. So SPY is pretty much flat right now, up only 0.06%. The diamonds down 0.04%. The NASDAQ up 0.36%, so some relative strength on the NASDAQ. The Russell's up 0.34%, also showing relative strength, and the financials down 0.27%, showing some relative weakness. So take note of that. The market internals, the tick is pretty much neutral for the day. So far it has corroborated pretty nicely with what we've seen in the markets. Not much else to say about that. The trend is bearish yet again. Yesterday we saw pretty much the same trend action, chopping around between the 1.2 and the 1.5 range, but today it's more of the 1 to 1.4 range. So that means more volume is flowing into stocks on the decline than on the rise, which is bearish. Sorry about that. Let's take a look at the VIX. The VIX is up 1.5%. So with that reading, I would expect the markets to be down fractionally, probably down 0.3% across the board. Let's take a look at the dollar. The dollar is pretty much unchanged. It hasn't moved really today. So that gives way for some sideways action in equities, as it doesn't support a move in either direction. The gold ETF here is down 0.4%, so that should be pushing stocks down a little bit, at least with our recent correlation we've seen. When gold goes up, the stocks have gone up recently, and vice versa. Just want to take a quick look here at the SPY daily chart. As you can see, we are still in the 108 to 111.70 range, or 111.50 if you will. We still have this high base type formation here. Even though it's really choppy, it is still a high base. It's not the prettiest consolidation I've ever seen, but if we do break out to the upside with convincing volume, I might be tempted to take a long trade here. Not too sure of that yet. Depends on how everything else looks, but it's better for me right now to be sitting on my hands as I am and waiting for better confirmation than this. Because right now, though this choppy, indecisive action on low volume, there's really no good patterns to trade. Real quick, I want to take a look at all the news that's going on today. The news on Yahoo Finance is that rates hit a 30-year mortgages are at a 30-year low, which is good for home buyers. The manufacturing index came in a little lower than expected. Jobless claims a little better than expected, and productivity costs a little better than expected, being lower there. Tomorrow, look out for the employment situation report as well as factory orders, as those could be big reports that move the markets. Thanks for being a part of swinghigh.com. Check back this evening for your post-market analysis. Talk to you later.